Hello, chart watchers and Decision Point faithful. Welcome to this Friday, July 5th, 2019 edition of Decision Point with your hosts, Carl and Erin Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. All right, Dad, we've been doing a little bit of rocking and rolling, haven't we?
Right. We're shaken, not stirred.
Exactly. We thought we'd open up just really quickly with an image of where the earthquake was and where we're at. So we're down here in Redlands. This is up toward Bakersfield, I thought is up there. The
Well,
blue one is the big one.
Ridgeland is up there. It's out in the middle of nowhere.
Thankfully. But the blue is the actual, the big one, the big one that hit.
And the other ones showed, well, the reds were in the last hour from the time I took the screenshot. And then the other ones were this week.
Yeah.
There's been a lot up there.
Yes. I know you've been watching this, so it probably didn't come as a surprise.
Oh, no, that was a total surprise. Yeah.
Oh.
Seriously, yeah.
Yeah, I mean, and for those of you not familiar with earthquakes, they kind of are different. And what I called this kind is a slow roller. We were rather close, but what you feel more than anything is like your house is floating on water. It's this very weird, disorienting thing. It wasn't, if you're closer, of course, I'm sure he lost, and I'm sure we've seen a lot of the damage, but from where we're at, it was more of a slow roller. All right, well, we better get into charts. So we will be going over those broad market indexes, and we'll do that weekly review now that the weekly charts have gone final. I will be going over the DP indicators, and I'm going to focus on our Swenlin Trading Oscillator ChartList that is out there for free that you might want to check out. Carl will be going over the big $4 gold, oil, and bonds. And as a bonus, he'll be looking at the Bullish Percent Index and a few more extra charts that he likes to look at. Let's go ahead and start off with the Decision Point scoreboards. No changes. The only thing we're watching at this point are those sell signals in the long-term PMO. These signals are derived from the monthly chart. And the monthly PMO, when it crosses above or below its signal line, that's where we get these particular signals. And right now, the PMO on the monthly chart is still below its signal line. As far as the sector scoreboard goes, everybody is in the green. Intermediate term trend model buys mean that the 20-day EMA is above the 50-day EMA. And as I was mentioning earlier, long-term trend model, the 50-day EMA is above the 200-day EMA for these buy signals. So XLE is the only one right now that is struggling, and this sell signal came in when the 20 crossed below the 50, while the 50 was below the 200. We had the sell signal already in the long term, so when we got the negative crossover below on a sell signal, we made this a sell and not a neutral. All right, let's go straight over and start looking at these charts. These are in the Decision Point live chart list. These charts, exactly as I'm showing you, you can access just by going to the articles tab, clicking on the Decision Point blog, and then at the very top is a link to this chart list. So if you're interested and want to save some of them for yourself or just follow them as I annotate them during the week, feel free, because it is free. All right, Dow Jones Industrials, we're looking at the relative chart. So these are all price relative to the S&P 500. And, one thing to note, when it's rising, that does not necessarily mean that the index is rising. It just may be falling a less fast than the relative index that you're looking at. So just keep that in mind when you see these. But right now, what I would point out is, the Dow has started to lose some of its relative strength, but overall, it's really been performing very similarly to the S&P 500. We're seeing that same setup here on the Nasdaq 100. I'd say even on the OEX, we're still mostly sideways, so performing about the same as the S&P 500. These are the important ones that I've been watching because we have been on a declining trend with the mid caps and the small caps. And I know Tom Bowley has been writing about this relative low, both of these that we have not seen within the past, let's see, this is a year-long chart. But if you go back even further, these are some relative lows we have not seen in quite a while, and it's good to start seeing it coming out from those lows. We'll just have to see if it's enough to start outperforming the S&P 500. Right now, not quite there. As far as just the indexes go, price charts, these are this is the equal weight, and we look at the other ETFs for these indexes to keep it all together in the same, apples to apples. And what I really wanted you to note on these charts are these highs that we had back in August of last year, and see how far those indexes have traveled to get up above, or are they well below, like S&P 600? Look at this, well below those highs. Yet the S&P 500, well above them, has continued to set new all-time highs. We're starting to see the Dow has gotten above them and started to set new all-time highs. And the S&P, I don't have the S&P 100, but the same thing. And on the Nasdaq 100, the QQQ starting to participate with new all-time highs as well. Global markets, these are the ETFs, so be aware that the dollar does affect these. So if you want to look strictly at the index, just know the difference. Again, apples to apples, we want to keep all of the ETFs together. And again, really the point to be made, I think, on this chart is the distance these ETFs in these various countries are from their highs that were back in January of this year. And, you know, Canada's gotten back above, but not quite above that that top, that high.
January of 2018.
Mm-hmm. Yes, yes.
You said this year, so.
I'm sorry. Yes, January of 2018. So there's still a lot of work to do on a lot of these ETFs anyway to get up to even challenge those highs from back in January of 2018. So still a lot of weakness out there globally. All right, I'm going to fly through these because I think the other charts are more interesting. The Dow is, as I said, we hit some new all-time highs intraday, it looks like, and we also pulled back just a little bit today. One of the things I wanted to note was this deep decline in volume, but it is really due to the holiday trading. I don't think it has a whole lot to do with the direction of the market right now. You've got the PMO on a buy signal and still rising, and certainly not overbought. I like seeing the OBV starting to make a little bit higher highs here than previously, right alongside price. So I think it's confirming the current trend to the upside. And the weekly chart for the Dow, again, just we're getting up here and challenging those highs we had back in 2018, specifically the one we had back here in October. September, October. PMO is on a buy signal and rising strongly along with price. So, you know, internal strength still looks pretty good for these. Nasdaq 100, pretty much the same kind of a chart. Still room to move without getting overbought, and also rising OBV, rising with price. Weekly, we're still seeing a PMO buy signal. It actually avoided a sell signal earlier. The OEX, you know, here I thought was rather interesting, though, is it did make new all-time highs and really, I think, showed a little bit more relative strength this week than we saw on the other indexes. Still very similar in that the PMO is not fully overbought, and we're not seeing, we're seeing that the OBV is participating on the rise as well. And weekly, there you can see that breakout. S&P daily chart. And you can see we got up to all-time highs a few times, whereas we saw in the Dow and some of the other indexes, they barely made new all-time highs. But the S&P 500 is still rising strongly. Took a little bit of a pullback today. I'm not really surprised. You'll see the chart of the ultra short-term indicators, and I think they did give us a little insight into a pullback. Right now, we've got the PMO above the signal line and bottom above that signal line. Again, I always find that to be especially bullish, and there's that breakout, so looking pretty good here for the S&P. This was where I had some interesting observations, and I can see that today's observations aren't quite as exciting here. There we go. I like to measure where we're at right here and right there. And then you can see the VIX. It has been punching outside of that upper Bollinger Band for quite a while. And typically all it takes is just one little puncture and you start to see a little bit of a move to the downside. You'll get a buying exhaustion, and we see a decline over the next day or two a lot of times. So seeing the VIX, this is really, I think, a great lesson in the fact that these kind of conditions can persist. So getting overly, confident about a particular direction that the market might be taking based on some of these types of overbought conditions, you can see that they can persist. I still find this worrisome. I was especially interested on Wednesday when we got these significantly climactic readings, I would say. This one, not so much. And it was coming off of a big move to the upside with the gap. I would have looked at that as more of an island. I would have expected to see a pullback there to close that gap, and we did get that. And we didn't really have to suffer too much to do it. So I think that's also a pretty good sign. But
before you leave,
still here.
Before you leave, I wanted to comment. When the first time the VIX punctures the top Bollinger Band, that's when you should start expecting a short-term top. Be ready for it. It doesn't mean you immediately go short or anything like that. It's just start thinking top.
Mm-hmm.
Exactly.
In
fact, we did get a top today. It was
kind of
lower than the day before, but not particularly impressive at this point.
Right. So I am still watching that closely. That's a lot of complacency. I mean, maybe it's, it was holiday week. Maybe everybody was feeling really good this week. All right. Short-term indicators, and we're going to go over a few more of these STOs, the Swenlin Trading Oscillators. Point to be made, we're overbought at this point, so you should start to look for a bit of a decline off of that. That's fine. The main thing you want to watch is that zero line. We want to see oscillation take place the majority of the time above that zero line. As soon as you start to move down lower below that line, that's when things start to get a bit dicey. So right now, I think this is pretty positive, but we are overbought, so we could expect some decline. But I feel less concerned about an overbought decline versus a decline that comes off of a downward move like that below the zero line. And the intermediate term indicators, there they are. I think they look great. We did back off a little bit, but never went below the signal line, and they are still rising, and they are not overbought at this point. They came out of their declining trend, which I also found to be very positive. Now, I'm going to show you really quickly. We have a bunch of chart packs, and they are free. There's a market indicators one. We have an intraday. If you're interested in getting chart packs, you just go over to your account and right here. And then if you click on that, you'll get the opportunity to add and manage the chart packs. All of the DecisionPoint ones are free, and I can't even tell you the wealth of information that lies within them. But I wanted to concentrate on those short-term indicators, the Swenlin Trading Oscillator. And what's great is I have this market indicators chart pack for all these indicators. And when you go into those chart lists, you get that indicator for all of the different indexes that we cover and calculate for this indicator. And that includes the McClellan Oscillator, the McClellan Volume Oscillator. And the great thing is all those charts are already there, ready for you to look at. And we're going to go really quickly through this because this is how the strength of having these kind of chart packs are. So we're looking at the NYSE composite, and we're getting the same sort of information that we got on the other, in that we're getting an oscillation above the zero line, and that is healthy. And in this case, I would say we're somewhat overbought, because we've seen certainly higher readings, but we're getting into that area to maybe throw in a little caution. And when that was the all issues, and you can look also at common stock only. And again, same thing, we're still getting that oscillation above the zero line. So we're still healthy as far as the overall NYSE. The Nasdaq itself, this was interesting. We did get a move below that zero line on that pullback, but immediately have turned back up. I would still say we're oscillating mostly above the zero line, and that's showing internal strength for the Nasdaq. This is the Nasdaq 100, and you can see a little bit better as far as strength. You didn't get that dip all the way down, so large caps doing a little bit better. And we are overbought, I would say. So again, just, have some caution. We looked at the S&P 500 ones, so I will skip through those. Now I'm looking at the OEX, and again, oscillation above the zero line, getting overbought. And then the Dow, same. S&P 400, very interesting to see that low oscillation, really not even getting overbought, but staying above the zero line. I find that positive. And then finally, the last one is the S&P 600. And certainly can see a difference with the 400 and the 600, with these low readings, never really getting that overbought, just not really showing a whole lot of oomph to one direction or the other, mostly moving sideways in more of a neutral fashion. And not a surprise to me, given the underperformance of both of those indexes. All right, I'm going to pass the screen to you.
While you're on this, the way I designed these charts is the market indicator sets is that you just click on that arrow up at the top and just click through and look at the charts as they show up, and you can just look for any kind of deviation. See, it'll show you which segments of the market are stronger than others, or something seriously out of whack.
And that's what I think you're seeing on the 400 right now.
Right. And notice you got volume much smaller than breadth. Breadth is doing fairly well, but volume has been sad for a long time. Okay, I'm going to take it here.
Yep.
See if I end up in the right spot.
All right. Yeah. There it is. Gotcha.
Okay. Starting with the dollar, we had a rebound week, and today you can see that it closed near the low of the day, but we have a Pmo crossover. Supposedly this is positive. I'm a little bit skeptical, and I'll show you why. But notice that we have the 20 EMA and the 50.
We lost some of your audio.
When it opens, it will absolutely cross. Okay. Yeah, I'm kind of slow internet signal. All right. This is why I'm skeptical of any future upside, is that we have this long-term resistance line, which we did. It looks like it's going to turn up here the weekly, but I'm still thinking that the resistance line is going to keep it in check. Don't want to see the monthly yet, or today. Okay, gold. We've got a breakout. It's right around in this area here. Sorry, right around here. So, and it's consolidating above the breakup point. Notice that we have a PMO turned down today on the daily. Don't like that. Okay, here's that long-term resistance I was talking about at 1375. We're above it, so it's now support. And, well, the hope is that it will stay above there. I wouldn't be surprised to see it come back down here, but I still think overall it's heading higher. USO, crude oil, we've got this island reversal here. You notice there's a double bottom there, and we've met the upside expectation from that double bottom. And so now it's bouncing around in between these gaps. I don't feel particularly optimistic about it going significantly higher. Crude is in a trading range between 76 and 42, and I'd be very surprised if it gets back up to this point. I wouldn't be surprised if it tried to test this line. Don't want to look at the monthly chart because it's too early in the month. The bonds, we had a breakout this week, and then they pulled back. Not quite sure what to make of it. I think this all had to do with the jobs report today, and the jobs report has people thinking that maybe we're not going to get an interest rate cut later this month. So that means bonds are not as optimistic. Notice the PMO turned down below the signal line. Here, had that long-term resistance. We did get above it this week. And I still have a feeling that we are going to go higher because this is the yield on the 20-year bond. And it's, as you can see, it's still can go lower without getting too extreme from what we have seen. So I'm still looking for bonds to go higher. Our yield array. Notice that the 1 month T-bill is now yielding as much as the 20-year T-bond. So that's quite an inversion there. It's even yielding more than the 3 month T-bill. But see, all these down here are longer term, and so we have a really major inversion here. Something I wanted to bring up about volume, and this is not the chart I wanted to show. Last Friday, we had an exceptionally high volume, considering that it was just a normal, that here's the options expiration day. This almost equaled it. When I figured out, I said in my blog last Friday that I thought it was probably traders getting flat ahead of the weekend. Well, it's actually probably they were getting flat ahead of this whole week. So that was something I wanted to point out. We already talked about the VIX. Here's a chart I set up of the major indexes with their corresponding Bullish Percent Index, BPI. And what I wanted to point out is here we had really good participation at the January 2018 top. And that was same with the Nasdaq and with the NYSE. Then in late last year, we had a higher high here, and yet the BPI was lower participation. Same goes for the Nasdaq Composite and the New York Stock Exchange Composite. Well, actually, it's been in a bear market until officially we got a breakout just recently here. But even at that, we had lower participation here, a little bit higher at this most recent top. But right now, we've got, this is 25% below the record here. This is 25% below, and this is 11% below. So the participation isn't there. It's closest to being there with the large caps. But one thing that I'm looking at is we've got a rising trend on the BPIs. If that trend line is broken, I would say watch out. Let's see the, oh, by the way, I didn't put it up here, but I have a blog on StockCharts.com with the most recent earnings chart. I try to do that quarterly, and so take a look at that if that's an area that interests you. We're still grossly overvalued. Okay, we have this is the intermediate term trend model buy signals in the S&P 500. That's steadily improving. That's good. Still, it's a negative divergence right here, but it's not done going up as far as we know. We've got a negative divergence on the long term. This is the Golden Cross Percent Index. I think that speaks for itself, but it's a little behind.
All right. You know what? We're just about out of time.
Okay.
I'm going to have to close everything off and ask all of you to come back next Friday and you'll see even more charts. I want to thank you all for joining us today. Please do remember to complete that survey as you exit. We like to get your feedback and hear about topics you'd like to see us cover. And as a quick reminder, Decision Point airs Fridays at 4:30 p.m. Eastern. Have a great weekend, and we'll see you back here, I hope, next Friday. Happy trading.